Hi, I'm Cliff Ennico, legal and tax editor for ityourbiz.com with some thoughts on sales taxes. So you're selling stuff online. Let's say you've got an eBay store or you're selling as an Amazon.com affiliate, and your customers are in just about every state of the union. Now, you know you got to pay sales taxes whenever you sell something to a resident of your state, but what about when you sell something to a resident of another state? At what point do you have to charge, collect, and pay sales taxes when you sell stuff to people in other states? Well, the general rule is you don't have to. If you're in state A and you sell stuff to people in state B, you generally do not have to collect and pay sales taxes on that transaction. But there are some exceptions, and two that are very important for online sellers. First, physical location. If you are in state B and state A and your business has a physical location in state B of any kind, you are deemed to have what they call a nexus in that state. And when you have nexus in a state, you are required to pay sales tax and sometimes income tax whenever you sell to residents of that particular state. So let's say your office is in state A, but you have a satellite office in state B, or a PO box, or a UPS store private mailbox, or a warehouse that you deal with. Those are all examples of physical locations that, if they're in another state, may give you nexus in that state, and that may require you to charge and collect sales tax whenever you sell to residents of that state. Any kind of physical location that you have in another state could be a problem. So let's say, for example, you have an employee who works out of his or her home, and that home is in another state. That home office could well be considered an extension of your business, which would subject you to nexus in the state where that employee lives. So keep in mind, physical location. If you do not have a physical location in another state, then you do not have to worry about nexus for sales taxes. But there's a second set of rules too, and I'm going to call these the transaction volume rules. A growing number of states are hurting for money right now, and they're hurting bad. They are desperate, and I mean desperate, to collect more sales tax from out-of-state vendors, from out-of-state sellers. And when people are desperate, they do desperate things. A lot of states are getting very creative about expanding their nexus rules to pick up on out-of-state sellers who, even though they don't have a physical location in the state, they're doing so much business there that the state feels justified in requiring that they pay sales tax to the state. I'm going to call this the transaction volume rule, and it only applies in a certain number of states, but that number of states is growing even as we speak. Here's how it works. What the state law will say, if a state has a transaction volume rule, what it will say is, if an out-of-state seller sells more than X thousand dollars in gross sales to residents of our state and is directing and targeting its marketing to residents of our state, we say they have nexus here and they should be paying sales taxes to us. Now let's take that apart. That's a two-part thing, and let's take each part in turn. First, the sales volume test. If you're only selling a few things a year to people in a certain state, you don't have to worry about this so much. But once you start getting around $10,000 in gross sales to residents of a specific state, I would advise you to talk to your tax lawyer, tax accountant, whoever does your taxes, and find out if you're going to be subjected to that state's nexus rules. Because in the states that have adopted these rules, the threshold is somewhere usually between $10,000 and $20,000 of gross sales. Now, obviously, they're trying to pick up on all the mail order catalog people who send millions of catalogs to residents of the state and hoping to get a 1% return on their investment. But this could pick up a lot of online sellers too. If you're selling close to $10,000 each year to residents of a specific state, you should ask your tax accountant for advice on whether or not you have nexus in that state, because you might be getting close to their threshold. But even if you do go over that threshold, you may not have nexus as long as you are not directing and targeting your marketing activities to residents of that state. So if you just got a website and your customers are coming from all over the place and you're not reaching out to anybody, this is something you probably don't have to worry about. But let's say you're doing an email blast and you're sending an email blast to 5,000 residents of the state of Connecticut. Well, that's starting to get a little close to a number that might give the state of Connecticut pause to think that you might actually be targeting residents of Connecticut as part of your email blitz. Or let's say that there's a website out there, 99% of the hits on this website are from residents of a single state, and you take out a banner ad on that state-specific website. If you're doing stuff like that, you may be directing and targeting your marketing activities to residents of that state. So again, to recap, if you are selling more than X thousand dollars of of merchandise, again, gross sales to residents of a specific state, and you are directing and targeting your marketing activity to residents of that state. You are reaching out and looking for customers in that state. That state may come down on you at some point and say that you owe them sales tax. Talk to your tax accountant, talk to your tax advisor, and get the advice you need before you make a mistake. I'm Cliff Ennico for It'sYourBiz.com.